A survey by accountants Deloitte shows that confidence among British finance directors has reached its highest level since the middle of 2007. Well, let's find out why by asking Deloitte's chief economist and author of the survey, Stewart. Good morning to you, Ian. So overall, things are looking up. Is that the main conclusion here?
Yeah, I mean, optimism amongst chief financial officers has risen quite sharply. And I think what's particularly interesting is that the sort of fears of the effect of the financial crisis, which were prevalent a year ago, have diminished considerably. There's still uncertainties about the economic outlook, but things are certainly looking up.
Now, just because people are relieved, these CFOs are relieved that things aren't as bad they were a year ago, well, that doesn't mean that we can call them confident, does it? I mean, half or nearly half of the people in your survey said that they were concerned about the risk of a double dip.
That's right. I mean, the biggest single concern amongst CFOs is about the economic outlook and the risk that things will slow again at some point. I think what is news is that the financial side of companies' operations are looking in better shape. Balance sheets are in better shape. Over the last 12 months, CFOs have done the right thing in terms of cutting costs, building liquidity, and that puts them in a pretty good position at the start of what I think most people assume is going to be a fairly slow recovery.
Okay, well, let's look at the priority list for UK CFOs in 2010, because you guys have listed these out. Just take us through the top few.
Well, the two top priorities are still pretty defensive priorities. They're husbanding cash and controlling costs. So companies are still focused on pretty defensive strategies. What's interesting, I think, and what's new is that companies are also looking to more expansionary strategies in terms of new product development and moving into new markets. So I think that the interesting thing is that corporates are expecting a slow recovery. They're still focused on cash flow. They're still focused on cost, but they're also looking for opportunities that will come as the economy starts to recover. And that is new. They are looking to benefit from an upturn in the economy.
Okay, I'm just looking at the priority list here. Reducing costs, increasing cash flow. The top two. In the middle there, you have expanding into new markets, expanding by acquisition. And then way at the bottom is increasing capital expenditure. Now, if that's not a priority, then that isn't a very good thing for the economy, is it?
Well, I think what it suggests is that there's probably still quite a lot of spare capacity in the corporate sector. There's a lot of slack. And what that means is that corporates aren't anticipating a big pickup in capital spending anytime soon. I think the good side of that is that it implies that inflation is going to remain fairly weak. The downside is that capex is going to remain weak near term too.
So a balancing act for CFOs this year. Thanks very much, Stewart from Deloitte there.